Google stock is down 8% after the company announced its Q4 2024 earnings results. The business reported strong numbers and growth, but the market is continuing to sell it off in after-hours trading. So in today's video, I want to discuss the highlights from Google's earnings, why I think the stock is selling off, and if it's looking like a buy now. And with that being said, let's just hop right into the video. Alright, so as always, I went through Google's Q4 earnings results and took screenshots of all of the highlights that I found. So right here we can see that Google's consolidated Alphabet revenues in Q4 increased by 12% year over year to $96.5 billion, which was also a record amount of revenue for the business in its history. Google Services revenue increased by 10% to $84.1 billion, Google Cloud revenues increased by 30% to $12 billion, total operating income increased by 31%, and net income increased by 28%, with earnings per share increasing by 31% to $2.15. So right away, we can see that Google's revenue is still growing by double-digit growth rates, and Google Cloud had a very strong quarter with 30% year-over-year growth. The profits of the business also grew by 30% on a year-over-year basis, so this was a pretty strong quarter from Google. The CEO also said, "We are confident about the opportunities ahead, and to accelerate our progress, we expect to invest approximately $75 billion in capital expenditures in 2025. And I think this is why the stock is down in after-hours trading, because $75 billion in capex for next year is a significant increase from the $52 billion in capex Google spent in 2024. So Google is continuing to ramp up their capex massively, and this is obviously going to lower free cash flow by quite a bit. Moving on, let's take a look at the full year 2024 highlights. So revenue finished off at $350 billion. Revenue also grew by 14% year over year. Operating income came in at $112.4 billion, and the operating margin grew by 5% to 32%. Net income also crossed $100 billion in 2024, with EPS coming in at $8.04. So Google had a very strong 2024 and hit over $100 billion in net income for the first time on a year. This next screenshot shows us all of Google's different business segments and revenue. Here we can see that search revenue is up 12.5%. The Google Network revenue is actually down 3%, YouTube revenue is up 14%, subscriptions are up 8%, and once again, Google Cloud revenue is up 30%. So almost all of Google's different business segments are continuing to grow, and this is a good thing to see. The next screenshot is Google's segment operating results. So Google Services operating income came in at $32.8 billion, which is up 23% year over year. Google Cloud's operating income also came in at $2.1 billion, which is more than double on a year-over-year basis. It's also worth noting that Google Cloud's operating margin is still well below Microsoft Azure's and AWS. So I do think that Google Cloud's operating income will continue to grow at very fast growth rates as the operating margin expands and the top line continues to grow at about 30% annually. Or in other words, Google Cloud is going to continue adding massive amounts of operating income to Google's overall business, or at least that's what I think. Total operating income came in at $31 billion for the full year as well, and increased significantly year over year. All right, now let's move on to Google's cash flow statement for the fourth quarter and for the full year, and this was pretty surprising. So right away, we can see that operating cash flow for the fourth quarter came in at $39 billion, which was a record for Google by far. Last year, the company produced about $19 billion in operating cash flow. So in the fourth quarter, operating cash flows more than doubled on a year-over-year basis. And this was a very strong quarter for Google. They also produced $125.3 billion in operating cash flow for 2024, which was a growth of about 24% year over year, and was obviously a record for the business. Now, what's also great to see is Google's stock-based compensation has not really grown on a year-over-year basis. In the fourth quarter, it's only up by about $160 million to $5.8 billion, and for the full year, it's only up by $300 million to $22.8 billion. Now, this is still a lot of stock-based compensation going on, but it's not growing that much anymore, and I hope to see this trend continue, because if the stock-based compensation does not continue growing, or if operating cash flows continue to grow at a much faster rate than stock-based compensation, then the stock-based compensation will become less and less relevant over time. And that's exactly what I want to see. Heading back over to the cash flow statement, we can see that Google's capex for the fourth quarter was $14.3 billion, and for the full year, it was $52.5 billion. Now, again, for 2025, Google is expecting the capital expenditures to grow to $75 billion, which is a massive increase from the 52 billion that they had in 2024. And again, this is going to weigh down Google's free cash flow potential. For example, in 2024, Google generated about $73 billion in free cash flow, whereas in 2023, they generated about $69 billion. So free cash flow only grew by about $4 billion year over year, despite operating cash flow growing by, what would that be, $24 billion. So the increased capital expenditures are almost fully offsetting the increases in operating cash flows, which is resulting in Google's free cash flows not really growing anymore. Now, what Google is doing with those free cash flows is buying back $62 billion worth of shares and paying a $7 billion dividend now. So Google returned about $70 billion to shareholders in 2024, which was almost all of the company's free cash flows. So now let's head back over to Stock Unlock to take a look at some of Google's KPIs here. And what I want to show you all is Google Cloud's revenue growth rates. And we can see that Google Cloud did continue to hit fresh all-time high revenue in the fourth quarter. But if we take a look at a percentage change, we can see that in the most recent quarter, Google Cloud's revenue growth rates did come down. And I think that this may be another reason why the market is selling off Google stock in after-hours trading, because Google Cloud did see a little bit more weakness than in the previous couple of quarters. On a trailing 12 months basis, we can also see that Google Cloud's revenue growth rates did decelerate in the fourth quarter, and I am seeing on social media that investors are not too happy about this. Let's next take a look at YouTube ads revenue, and we can see in the trailing 12 months now, YouTube has produced about $36 billion in revenue and is continuing to grow and hit all-time highs. Google Search has produced $198 billion in revenue in the trailing 12 months now, and just like YouTube, it is continuing to grow and hit fresh all-time highs as well. Now, what's also great to see is Google Cloud's operating income is now at $6.1 billion in the trailing 12 months. And if we take a look at a quarterly basis, we can see that the most recent quarter was a record high for the business with about $2.1 billion in operating income produced. So Google Cloud's profits are continuing to grow at a very fast growth rate. And again, I think that this is going to continue growing extremely well in the future and adding to Google's overall profits going forward. So now let's talk about Google's valuation and price today. And as we can see in after-hours trading, the stock is down roughly 8%. And with the $125 billion in operating cash flow that they produced in 2024 now, the stock is trading for about 18 times operating cash flows. And I do think that operating cash flows are the best metric to use to value Google's business today, because they are investing so much money in capital expenditures, which is significantly lowering free cash flow and therefore bumping up Google's price to free cash flow dramatically. So to get a more accurate view of how the business is valued today, I do think that operating cash flow makes more sense. And as I wrote in my book, when a business is investing so much money into growth capex, operating cash flow can make more sense to use. So let's head over to Stock Unlock's freeform tool. And here we can see that over the past decade, Google's average price to operating cash flow has been about 17.9. So the stock is trading slightly above its 10-year average price to operating cash flow ratio in after hours trading right now, which could suggest that maybe it is trading for about fair value in after hours. I also ran a reverse DCF on Google to figure out what the market is currently pricing into the stock, and we're going to be using the operating cash flows over the next 5 years, and the market is currently pricing in about a 10.7% annual growth rate to operating cash flow, 2% annual buybacks, 10% dividend growth, and to trade for its 5-year average price to operating cash flow ratio of about 17.3. So basically, the market is pricing in about 10.7% annual operating cash flow growth going forward. And if Google can deliver on this, then the stock could produce a compounded annual growth rate of about 10% annually. So then the question is, are these numbers too pessimistic or optimistic for Google? And in my opinion, I do think that Google does have a pretty good chance of continuing to grow its operating cash flows by over 10% annually over the next 5 years. Google Cloud is growing extremely well, and the other business segments of Google are also doing very well. And as we saw, its operating cash flows grew significantly in the fourth quarter on a year-over-year basis, and on a full-year basis, operating cash flows grew by about 24%. So 11% annual operating cash flow growth is pretty low relative to what the business is currently doing. So I do think that there is a pretty good chance that Google can continue to grow operating cash flows at a faster rate than 11% annually. And if it can, then the stock could deliver over 10% annual returns going forward. I also listened to the fourth quarter conference call, and I have some notes here that I thought were pretty interesting. So from the call highlights, the CEO said that Waymo will be in Tokyo, Austin, Atlanta, and Miami this year. So it seems like Waymo and its full self-driving vehicles are expanding throughout more US cities, and they're officially going to be in the international markets with the first Waymo hitting Tokyo sometime this year. What's also interesting about this is people say that Tesla is leading in full self-driving, but Waymo has fully autonomous vehicles driving in cities right now, delivering rides to passengers in the US and now internationally in Tokyo. So it seems like Waymo may actually be leading in the full self-driving space, and Google does own Waymo, and I thought that this was pretty interesting. Google also said that CapEx is being used to build out AI and data centers more. Why this is interesting is because the CFO said that the data center capacity was constrained in the fourth quarter, and Google's revenue growth rates could have actually accelerated with Google Cloud in the fourth quarter if they were not capacity constrained. Or in other words, Google Cloud is seeing more demand than they have capacity for, which is why the CapEx is projected to grow so significantly in 2025. So Google is spending so much more on CapEx in 2025 because they literally ran out of capacity in 2024. And therefore, Google sounds confident that this CapEx is worth it as they have too much demand. Or in other words, I don't think that Google would be ramping up CapEx to $75 billion and investing so much money into CapEx if they didn't think it was going to be worth it and actually produce results. So with the company literally running out of demand in 2024, I do actually think that there is a pretty strong argument that this CapEx is going to produce a high ROI and actually be worth it. And again, this is kind of why it might make more sense to look at the operating cash flows that Google is generating right now instead of free cash flow. The CEO also said that the cost of AI is going down, which is allowing the business to use AI in more ways. And this was kind of in regards to this DeepSeek news that came out recently. And the CEO basically said that if AI can get more efficient, then businesses will essentially be able to leverage AI more and it will not cost them as much. And ultimately that will allow AI to accelerate and AI advancements to happen more frequently. So those were the highlights from the conference call. And overall, this looked like a pretty solid quarter from Google, and it actually beat my own expectations as well. The stock is trading for its 10-year historical average price to operating cash flows ratios right now, but it seems like the market is not fully optimistic on the $75 billion CapEx spend being totally worth it for the business, and I think that's why the market is selling it off in after-hours trading. Also, Google Cloud's revenue growth rates did decelerate a little bit this quarter. I don't think that's an issue personally, but the market didn't seem too happy about it, and that could be adding some negative pressure to the stock price in after hours as well. But the business does seem like it is trading for about fair value, in my opinion. But I also don't think that Google is at like drop dead steal prices right now either. I think that it is about at fair value today and could maybe deliver slightly above 10% annual growth rates to the share price going forward. But that's going to wrap up my overview of Google's Q4 earnings results. And if you enjoyed this video, then please remember to leave a like on it. And if you want to stick around and see more content like this, then please consider subscribing to my channel as well. And as always, thank you all so much for tuning in, and I really hope to see you all again in my next video.